Good afternoon, everybody, and welcome to this edition of ThinkTechnical for Tuesday, 29 December. My name is Carl Capilingua. I'm the market analyst over here at ThinkMarkets, and it is a pleasure to be with you on our first session after the Christmas break. Hopefully you had a wonderful and safe Christmas. It's time to get back to the charts, though, and we'll do that after we talk about the ThinkMarkets Difference, which is substantial $8 flat rate trades, your own holder identification number, unlimited phone support, none of that little chatbot stuff, and of course no hidden platform or subscription fees. For fantastic reasons to make sure you choose us for your next ASX share trades. And hey, if you're thinking of switching brokers to come over and test out the ThinkMarkets Difference, you'll also get 10 free trades. Not long to go though, December 31, the cutoff on those. So get onto the website, download the ThinkTrader app and get trading. Okay, we'll have a little bit of a catch up in today's ThinkTechnical. I had some technical difficulties, funnily enough, with getting the market preview out this morning. So we'll sort of mix up some of those items there. We'll have a bit of a COVID update and some of the market moves from the last trading session around the world. And then we'll have a look at the technical charts. Bigger picture first, drill it down to the ASX, and then have a look at some stocks of interest. Okay, the COVID situation, and we're just looking at trends here as we do in ThinkTechnical, and the trends are still not fantastic. With 180, 190,000 new confirmed cases of COVID in the US and Europe there respectively, but a small downtrend from the 200s that we saw the week before Christmas, and the rest of those starting to flatten out. If you have a look at, for example, some of those European countries, Japan still on a worrying upward trend, China and Australia fairly flat there, of course, Australia coming off a very, very low base. But it's still with us, I think, is the message we're going to take out of that, and still a potential threat to the global economy. The markets for the last 24 hours, we had a small bump in the Nikkei and Shanghai Composite, the Hang Seng down slightly. We might have a look at the Nikkei chart in a moment. That looks very, very good for continued gains, as does some of those US indices. The Dow Jones up 0.7%, a better gain there on the S&P 500 with Tesla now at 0.9%, and the Nasdaq up 0.7%. The US Volatility Index edging slightly high, but the trend over the last couple of weeks is lower. In Europe, some good gains for the DAX up 1.5%, and the CAC was up 1.2%. The FTSE was closed. Obviously, Australian markets closed since 24th. Having a look at some of the moves on the London Metals Exchange, generally gains there, just copper edging a little lower, but it was up about the same amount in New York, and we haven't had any trade on the ones down the bottom. West Texas crude oil down 1% on just increase of supply at the moment. Brent crude relatively flat, and natural gas down 7%, but that is a volatile one. The Australian dollar roughly the same as it was the previous session. It's trading just under 76 cents a dollar. US index edging higher, and bond yields are pretty flat, to be fair. The most interesting thing on that graphic is the huge ascent of Bitcoin, iron ore coming second, and we know they've both had fantastic gains through 2020, but we'll have a look at the chart of both of those in just a second. The calendar for this week, nothing for Australia. That's always nice, a little bit of a break for us analysts, but looking to some of those overseas items, it is pretty quiet. You can see wholesale inventories, Chicago PMI, pending home sales, manufacturing PMI in China, and services PMI in China, and then weekly unemployment claims, but as I said, pretty quiet. And they are the ones coming up for this evening, our time. Let's head now over to the charts, and we'll kick off with the S&P 500 index in the US, the benchmark. A pretty good session last night, gapping higher on the open and then continuing its rise, closing pretty close to the highs and at a record high, eclipsing that 37.27 medium-term peak that we have now traded above. I'll get you the closing price there, 37.35. So we closed above it. So that's official, and so it's an official record closing high. And I can't see anything in the trends to suggest that the prevailing short-term uptrend and prevailing long-term uptrend won't continue. It's a pretty strong period of the year. Typically, this changeover from December through to January, We do tend to see some volatility through the second half of January and into February. We can see a pullback from these Santa Claus rallies. But for now, I would be happy to stick to the trend, and we should get some price action signals before anything majorly sinister happens on the downside. Have a look at the Nasdaq. It's pretty much the same as S&P 500, so happy to continue with a long side bias there. We might just have a quick look at the volatility index edging lower. Nothing really sinister in that one either to suggest that the uptrends won't continue. Have a quick look at Europe. The DAX, bustling to new highs again. That's very encouraging just from the broader risk-on perspective. Backdrop for equities at the moment. FTSE was closed, but that's nearing its sort of 6-month highs there. Shanghai Composite looking pretty strong. The one I wanted to show you was the Nikkei. That's looking very, very strong up here. A very shallow pullback after a strong run through November. And the shallowness of the pullback just indicates the significant amount of demand in the system. Yes, there was lots of demand through here. It wasn't meeting much supply. Some supply has come into the market, mostly probably just from profit taking. I say that because it doesn't look like there's any real positional supply or short selling coming in because there was such a little pullback. We know demand is strong because it's held that supply or held price up despite the supply. And now, I guess with the supply decreasing, how do I know that we're getting to the top of the range? If we break through, we're in an environment where we have very little supply and we can see plenty of demand, and prices can move quite quickly in that environment. We'll skip some of the Australian ones. We'll look at those in just a second. We'll keep it on overseas items and have a look through some of the commodities. Aluminium, copper here, iron ore still looking pretty strong. Nickel has had a little bit of a pullback but steadying. Lead a bit more of a pullback. Tin pretty good, zinc pretty good. So on the whole, I think those base metals holding up pretty well. Gold, we haven't looked at this one for a little while, just hovering beneath a little medium-term peak here at 1906, and a little bit of a no man's land, I think, between 1865 and the support at 1764. So I don't think there's much of a need to get involved in that chart at the moment. Looking more encouraging, however, is silver, and this is one I do think it's worth having another look at or buying on the dips. 24.94 supporting. Watch the moving averages there, probably 25.40 to 25 down to that zone may well be a buy point, and then through 27.38 I think we can go back up and test those all-time highs at 29.84, and it's good to see this long-term uptrend holding, and it held much better than gold, for example, which really came in and tested that long-term range. The Australian dollar looking pretty solid, up around the 76 level, nothing major to report there. I think the Russell 2000 had an interesting session last night. This is a broader market, and the smaller capitalisation end of the US market, a little bit of a blow off top there. I would be watching that with a little bit of interest, I think, for the next couple of sessions to see if it's a precursor of any extra selling. Okay, we're going to just change databases here and change gears and have a look at Bitcoin. And we can see since our last update, which was just before Christmas, if I'm not mistaken, it was on the 21st, which was here. And we discussed this possibility of Bitcoin moving up to this 29,570 level. And we said that was a projection. If we zoom out, we will find eventually the points we used to make the projection. So this high here in 2017, that was December 2017 at 19,458, and then we had a low in here, I think it was, I was going to say December again, might be December 22 if I'm not mistaken, at about 3,122, and if you project it back up from 3,122, well, 100% retracement would have to be 19,458. It is, to be fair, where the market took a little bit of a pause. I'll just get this zoom reset again for us. So the market did take a pause there at the 100% level. No surprise that was a supply point, but pushed through and then came up to this 23% projection here at 23,775. Took a little bit of a pause, and my target was this 161% projection into 29,570. We hit a high of 28,382 there, and just hovering, and I would not be surprised to see that target hit in the near future. So with short-term moving averages heading up quite steeply now. Long-term trend very well established, and nothing in the price action really all that sinister to suggest that these trends are going to change anytime soon. I think you need to maintain a long bias. On Bitcoin, I would be taking some profits there at that level, just sort of in the shadow of that 30,000, no doubt will be a psychological resistance point, and we could see a pullback from there. Have a look at some of the other markets on this database here. It's the West Texas crude oil chart now. The short-term trend still remains up. Long-term trend is still somewhat undecided. We're potentially getting a change into a long-term uptrend, but for that reason, I can't get too excited about this. I'd rather play stock charts, I think, than the actual crude price, but we do have a short-term uptrend in place to support some of that investigation. This is high-grade copper here. That continues to move in the right direction, if you're a copper bull, that is. And the iron ore price, the last time we looked at this again on the 21st, it was heading up in an exponential move. I said, look, just be a little bit careful, because when they do go exponential, we could see a little bit of a pullback. We have seen a bit of a pullback here into this 1,000 level, bit of consolidation here, and I just have to wait and see for some price action signals to determine where it might go next, but I would say that's holding pattern in the very, very short term. All right, another switch back of the database there, and we'll bring it closer to home. Have a look at the ASX 200 index, edging a little higher today on the back of those gains in the US and some, moderately higher base metals prices, obviously tempered by a little bit of a pullback in iron ore as well, and just general uncertainty about the Sydney situation as it develops. Of course, the COVID situation up there, and more broadly speaking, what's going on in the world. We have seen President Trump, he's still the president, and he has asked US Congress to approve a $2,000 stimulus payment to Americans. I think $75,000 might have been the threshold of your earnings there, but it goes for adults and children. So a family of four who each earn less than that amount would receive $2,000, so $8,000. It's been passed by the House, which is their lower house, and now it's gone to the Senate. Of course, Republicans still in control of the Senate, and they, I don't think, are going to look too favourably on it, but it's in the mix and in the system. So I think markets will respond moderately positively to that, but won't get too far ahead of themselves with that still needing to travel through the Senate. But we're seeing a small bump up for the Australian market. The short-term trend is still very much up. The long-term trend is established to the upside as well. We are seeing support coming through from this dynamic support zone here, and more broadly speaking, probably 65.50 to 6600. Happy to remain on the long side with with a bias towards long trades as long as we hold that level. If we were to get below that level, I'm starting to be a bit more concerned, because we have flattened out with our prevailing uptrend. We talked in our last update about the fact that these peaks are getting closer together, indicating that supply is becoming a little bit more pesky, a little bit more prevalent in the market, and demand isn't sufficient enough to push through and make those peaks occur at equidistant levels to the previous one. So yes, there's some supply in here. We have had a great run through November, so probably no surprise that there's a little bit of a profit taking and potentially some doubt as to the validity of this move. We need to work through that supply and continue to watch the price action. But long story short, let's maintain a long bias until we see signals to the contrary. In terms of sectors, we might whiz through these as well. I think the consumer discretionary still looks quite good, and would be happy to, if I found stocks in that sector, allocate in that area. I'm watching energy closely. I don't think it looks terrible, just probably needs to prove itself a little bit more. But if we do find stocks within that sector, happy to look at those. I think the financials look pretty good as well. Happy to look at that. We do have some stocks in the financial sector when we get to the stocks of interest. The gold sector looks a little bit disappointing here, actually, so a little bit concerned about that one. Healthcare, neither here nor there, fairly neutral. Information technology is the best looking sector at the moment, without a doubt. Materials looks very good as well, so happy to continue to select stocks from that sector. Property trusts also looking very, very, very good here, I think. Staples, fairly neutral on that one. Telecommunications, if you can find them, that's really the Telstra index. Happy to go on those. And utilities, I would be avoiding stocks in that sector for the time being. Okay, let's get stock specific and look at my shortlist if I can find the watch list. There it is. 26 or 28 stocks here, so we're going to whiz through them fairly quickly. And it really is, look, buy, hold or sell. These are all happen to be all buys. But so we're looking at a bias and potentially some key points that you might want to look at. These are, of course, trading ideas. Go back, do your own research on these stocks and confirm whether you want to get involved or not. We're going to kick off with Audinate Group. So the ticker code is AD8. Great short-term trend, great long-term trend. The price action, I think, looks pretty good and travelling quite nicely to date. Happy to get into it around the current levels. It is one that we have covered in the past on the 3rd of November at 760. So if you're on that, you're probably just a little bit ahead. If you're not on it, happy to go at the current level. And I'll give you what the current level is based upon the chart. And of course, depending on when you see this presentation, the price might have changed, but for what it's worth, 804 is the current level on the chart. Next one is Anteotech. I was going to say it's one we've covered before. Maybe it's just one I've shortlisted and then kicked out for whatever reason. But it's in here today. I think it's a little bit more of a conservative entry than the other one. Audinate, happy to go based upon the price action signals at the current levels. This one, I think you want to wait for a break of 11.5. So you could use what we call is an on-stop order. So it would only enter you into the market if the price trades to that level and above. And the reason why I prefer to do it that way on some trading setups, it's a little bit more conservative. We're waiting for the momentum to confirm itself. So we're waiting for a confirmation that we're moving back up out of this support zone here around that sort of 10-cent level. So on stop, I would suggest around about 11.5, but you make your own call as to whether you want to get involved. Otherwise, we saw the short-term and upterm trends well established and some really nice price action sort of stepping up from bottom left to top right, much as is the case with Australian Finance Group, ticker code AFG, ticker code ADO, and the last one, Anteotech. This one we've covered a number of times here, starting in late September at 198, so now around about 260, I think doing pretty well on that one. Happy to stick with it if you have it. If you don't have it, short-term uptrend, long-term uptrend, nice price action, and just happy to get in. I think that if you're not on it, they'll probably wait for the break of 264 on AFG. Next one is AIZ. This one's a little bit more of a speculative entry, but having said that, it's setting up the right way, but it's also more of a longer term view that I think you want to take on this one as well. So it's more of a turnaround play rather than, say, bottom left, top right, isn't it, on ADO. And AIZ, certainly not the case. If anything, it's more top left, bottom right. But we are seeing a potential change in this long-term trend. It's still down at this point in time, but we have moved above it. That's very important. We tend to find that an area that is clear resistance in the past, and it has been here, look how perfect that was there, can act as support going forward. And it's no surprise to me to see that once we have broken through this level, number one, we came back and tested. It happens very, very often, but also that we've bounced off that level as well. So confirming that the old resistance zone now acting as support. And it's not enough for it just to bounce there. We want to look for price action. We want to see some nice bars coming in with high closes, and we've seen 1, 2, 3 in a row now. So a nice bounce off that level tells me that we've swung from sort of prevailing supply into now prevailing demand. And as I said, a bit more of a longer term view. Take a more of a 6 to 12 month view on this. This is not a trade. It's more of an investment on the basis of this hopefully newly establishing long-term uptrend. So happy to go at the current level. For what it's worth, that current level is about 171 at the moment. On Air New Zealand, ticker code AIZ. I've got the cricket going on in over the side there, guys, so we're clearly about to lose. Australia's about to lose this test match, so that's why I looked over. Let's keep moving, shall we, with the technical analysis on Atomos. This is more of a keep an eye on this one. We have had a number of times. Happy to stay on it if you are. If you're not, wanted to see how this goes here, this rally back through the support zone. If it comes up, maybe gets to dollar, pulls back, and we put another nice little signal in here, I think that's when you can get involved. So if you've got it, hold it. If you don't, then we're just watching that one for now. ANZ, I think you can go on stop on this one. So one of those where we're waiting for that upside move to confirm that demand is coming back into the market. We have had a great run. No surprise to see a consolidation around here. Good to see the interaction with the dynamic support zone and looking for a trampoline of this area. And I wouldn't want to go just yet because I haven't seen the market prove to me that demand is in the system. So 23.82 on stop for ANZ. ARU, this is more of a well-established long-term uptrend. So happy to go on this one on a break of 13 cents. Arafura Resources is the ticker code on that one. Next one is Bapcor. We have featured this one a couple of times in ThinkTechnical, and I think you are going to go, oh look, if you're a little bit more aggressive, you may want to go just at current levels. I think we have turned the corner again and now are heading back up within this respected long-term uptrend. But if you're a bit more conservative, wait for a break of that high there, which is 805, which I must admit I haven't labelled, but we'll do so right now. So let's change that to 805, and that's where you'd be looking to enter that one. So Bapcor, ticker code BAP. Next one is BBN. It is also one we've covered a few times. So from 360, I think looking pretty good there. Happy to go on a breakthrough 484, just re-establishing this new long-term uptrend. Bank of Queensland, very similar to the ANZ setup, waiting for a break of $8 to confirm a move back to this short-term uptrend, and hopefully actually we can get an establishment of a new long-term trend there as well. So Bank of Queensland on stop, I would suggest, at $8. Beach Petroleum is just on watch at the moment. It hasn't had a particularly fantastic day today. We will see how it reacts to the support here, but just on watch. It's something I would like to get involved in on this recovery, potentially in the energy sector, but I wouldn't do anything until we got above 198.5. BUD on watch as well, and we're looking to get this one, if it was to break through 5.4 cents, and that would be confirming this hold of this long-term dynamic support zone. We move back up, we come back, tested it a second time at a higher level, tells me that demand is building back through the system, and then if it got through there, I think we've got a bit of a vacuum into 10 cents. So Buddy Technologies is that one, ticker code BUD, on stop at 5.4. This one is a bit more of a steady uptrend. It's obviously testing into this all-time high here at 276, but on the basis of the strength of this long-term uptrend and short-term uptrend, I think I'm happy to go here. I think this one looks quite neat, actually. It's a bit more of a long-termer, I think, than a short-term trade, simply because of the nature of the stock. It's a bit more of a slower and steady mover. The current price is $2.59. Happy to go at that price. EHE Estia, I'm going to take a longer term view on this one as well, much like I did on AIZ, and you can see how similar the charts are. So copy and paste all of my commentary for AIZ over here to Estia Health. I'm happy to go at the current level on that one, and that's around about $1.82. We do like to see a breakthrough the long-term downtrend, test, hold, and held it a few times, and now pushing up. So I think that one has potentially turned the corner on a more medium to long-term basis. Copy and paste for Emeco, ticker code EHL. The comments from in New Zealand and EHE, of course, same reasons there. This one's a bit more bottom left, top right. INF Infinity Lithium. It's in a pretty hot space at the moment. Lots of those lithium stocks going. So, hey, if you've got half a dozen lithium stocks in your portfolio already, maybe you might want to swap into this one or consider letting this go. If you don't have any lithium exposure, then have a good look at this one. I think on the basis of the strength of this move through here, it's a fairly shallow pullback, a fighting pullback into this support zone, and good move out of it as well. Happy to go at the current level, which is 14.5 at the moment, but it is more of a speculative trade, isn't it? So, keep that in mind. Jumbo Interactive, I think this is just more of a watch. I think if it gets through 15.14, it becomes a lot more interesting. So we're just going to see how that one progresses for the time being. This one is Karoon Gas. It is one we have featured a number of times here. I would stick with it if you had it. If you didn't, you might want to consider getting it around the current levels, which are about 107. Kingsgate Consolidated is probably the best looking chart in the whole gold sector, I would suggest. Happy to go at current levels. It is one we have featured in the past, in fact a little bit higher than here, so if you're with that one, I would suggest you would stick with it. If you're not, then you can consider getting in around the current levels, as we've just broken through that pressure point there at 87.5, within the context of an established now short-term uptrend, but a well-established long-term uptrend. So I would say probably the strongest stock in a weak sector. Keep that in mind too when you're comparing and contrasting these 28 odd potential setups we have here. This one is MP1. It is re-establishing, I think, again, its long-term uptrend. Not that the long-term uptrend ever changed. It was pressured through here, but I think we've held it well, and now we're moving back up with good price action. Good price action for me means higher peaks and higher troughs again, and that's what we're seeing. So I'd be happy to go here if you're a little bit more aggressive, and the current price is around about 14.75. If you're a little bit more conservative, you might want to wait for a break of that 14.99 level first. This one, look, it's a little bit smaller and a little bit more speculative. A little bit smaller. It's a lot more smaller than Megaport, but you might therefore want to be a bit more conservative with it and wait for a break of 8.5 cents. And if we got through there, I still think there's plenty to go in terms of percentage gains. But it's a very similar chart. I think that's what I was going for there. If you look at Megaport, how we're in a very good trend. We pulled back to long-term trend. We held it. We're going again. Very similar here to what we're seeing on Myanmar metals. So a break of 8.5 cents would be the way to go there. That ticker code MYL. And of course, ticker code on Megaport MP1. This one is Orthocell, one we have featured in the past before. It's around about the current level, but this one I think on a breakthrough 47.5 would be very, very interesting. If you're more aggressive, you could go now, but I think 47.5 is probably the most sensible way to go, and it would be really, maintaining that long-term uptrend, which is in place, the short-term uptrend, and breaking through quite a nice consolidation pattern, which has been going for a few months here, and we could target 68 cents. On that one, ticker code OCC. Next one is Peninsula Energy. This one is a potentially changing trend, so it's more of a turnaround play than a well-established trend, and for that reason, it comes with more risk. It comes with more risk because, as you can see, it's a smaller stock anyway and it's less liquid. But make of it what you will. These technical setups, and I think with the breakthrough of that long-term downtrend, we've come back, we've tested, we've held, and I think now that the resistance that this area has so clearly and so consistently provided, I think is now going to start to offer support, and we're at the start of potentially a new long-term uptrend. So very much a speculative buy. Happy to go around the current level, which is 11.5 cents at the time of this recording. This one is Rex Minerals. We have featured it in the past before. I'd stick with it. We said at that stage a break of 18.5 cents and no change on that one. Sandfire Resources, very similar setup to some of these other ones we've seen where they've had a strong run, they've pulled back to the support zone. It's like a magnet sometimes, isn't it? And we're starting to see a bounce off it. But much like some of the other setups, also we would want to see some momentum come through and break through that medium-term peak there at 550 to tell us that we're moving back into higher peaks and higher troughs. So SFR is a ticker code there. I would wait on this one for a break of 550. And if it doesn't come, then we don't get in. Very simple. Silex Systems, I like this one actually. This one is more of a well-established trend. We've got short-term uptrend, long-term uptrend. It's pulled back, it's held well. And this, I guess, demonstrates what can happen when you pull back to these long-term trends. You come in there, you come out, you hold, and then you go again. I'd be happy to go at the current levels on this one, which is about 75 cents. Yes, there's going to be a bit of supply in at 85, but I think on the basis of the strength of the price action, high peaks, high troughs, and the trends, they're happy to go on SLX. At the current level, Syrah, much like the Sandfire, yeah, very similar, isn't it? Very similar, somewhat similar to that one, but seeing some similar charts through here. Similar themes, happy to go on this one. The current price is 96.5 cents. It is one we have featured at 52 cents, so doing pretty well on that one. And I would suggest, since our last update, that the long-term trend has established the upside, and we're getting great support from this short-term trend. Now, 15th of October, very curious. Okay, well, there we go. So we're around here. Looking at that was the last time we looked at it, and it's that turnaround play, isn't it? So we've seen the strength and the consistency of this resistance zone, and then similarly, once we can break through those, that's when we start to get interested in them. And I get this question so many times as a technical analyst, and I've been analysing charts for over 20 years, and I often get this question, when do I buy these beaten down stocks? And really, I'm giving you a methodology here for how to do that. Okay, VVA, this is not a beaten down stock. This is more bottom left, top right. It looks fantastic, and I'd be happy just to stick with the prevailing trend and take advantage of a little bit of a pullback that we've seen here back to $3, bit of a psychological support level within the context of this broader long-term uptrend. So I'm happy to go. That closing price, the current price is about $2.59. And that is the end of that very long list and the end of our session as well. I'm going to flick back to the slides, if you'll permit me there, and say thank you for joining me. Hopefully you got lots out of the session. Of course, there's more than just technical analysis that we provide here at Think Markets, all sorts of other fantastic analysis for you, and it's all at our market news section of the website. If you like, you can follow me on Twitter, or the Think Markets handle is there also. In terms of upcoming events, we will have ad hoc updates like this one during this week, but then the regular session there is the weekly Think Tank on the 4th of January, and then a little bit later on, while we're on the subject of technical analysis, you can learn a little bit more about it in that Think Learning webinar coming up on the 13th of January, where I'll take you through the very basics of technical analysis, but set a good foundation, I think, for us to build on through 2021 to learn a bit more about this subject. And then on the 20th of Jan, we've got Ask the Experts, where you can tune in and ask me about any of the stocks in your portfolio, and I'll give you a quick fundamental and a more in-depth technical for you. Okay, before I leave you, just remember that everything we've discussed is very general in nature. There are no specific recommendations based upon your financial circumstances. So before you act upon any of this general advice, you should read this disclaimer and understand this disclaimer very carefully. If you have any further questions, of course, give us a call or consult the website for further details. It has been a pleasure being with you today. All the best for your trading. Until we catch up again, bye-bye for now.